The TeachPitch podcast. We are very excited to be launching a series of interviews for TeachPitch, a global community of 50,000 subscribers from over 205 countries to date. And for these interviews, we have selected a number of subscribers who have achieved great things. And by great, I mean amazing. Think of former presidents, entrepreneurs, people who've built hospitals, huge non-profit organizations, successful journalists, doctors, etc. And what all our guests have in common is that despite their great success, they've encountered many enormous challenges. So what were these challenges and how did they overcome them? That's what we're going to be talking about here. My name is Aldo de Pap and I'm massively looking forward and very grateful you can join us on this journey. So sit back, relax and download the podcast here.
I think the learning is how to interpret failure. And this is really hard because we are all surrounded by deep social pressures and stories about this person won because they're perfect and right, and this person lost because they were wrong all the time, and how embarrassing for them, and that's certainly amplified. I think it's really core not to internalize that and to understand the structure of the games, the market games or the political games or the prestige games that you are participating in.
In this episode, we talk about what it is like to be almost too ahead of the curve with a mind-blowing technology idea. It's great if you're early to a market, but not so great when there's no business demand direly needed to make your venture grow. We also speak about how tormenting it can be when you're an introvert but are responsible for sales and marketing, the most extroverted activities of a company. And lastly, we talk about all the emotions and challenges that come along when you're part of a company ship that is sadly going to sink. Enjoy this interview with Lex Sokolin, Chief Economist at Consensus, the biggest blockchain company in the world. For this episode of the TeachPitch podcast, we're going to take you to an almost alternate universe. No, we're not going to space travel like we did a few episodes ago when talking to a space lawyer, but we are going to travel deep into our laptops, computers, and smartphones. The word blockchain has become a bit of a buzzword. When I hear it, I associate it with a new type of online safety, and this mystic word that keeps on coming up, decentralized. When other people hear it, they might think cryptocurrency or Bitcoin. Every day you hear about new initiatives where blockchain has become part of the mix. But what is it really? With us today is Lex Sokolin, who is the head economist of Consensus, the biggest blockchain company in the world. Lex company uses Ethereum, a system based on blockchain, to build new enterprise infrastructure solutions for companies all over the world. And Ethereum is also tied to a currency that is growing up very quickly into the crypto world. Something I think that Lex knows a lot about. At Consensus, Lex is working on the next generation of financial services. He earned a law degree and an MBA from Columbia University and a bachelor's degree in economics and law from Amherst College. Previously, Lex was the global director of fintech strategy at Autonomous Research, COO at Advisor Engine, and CEO of Nest Egg Wealth. Lex also held roles in investment management and banking at Barclays, Lehman Brothers, and Deutsche Bank. Lex is also a contributor of thought leadership to the Wall Street Journal, The Economist, Bloomberg, The Financial Times, Reuters, American Banker, Think Advisor, and Investment News. Wow, Lex, a very big welcome to you.
Thank you so much for having me. It's always embarrassing having that stuff publicized, but I'm excited about technology, I'm excited about finance, and I love visual art. So hopefully we'll make this conversation interesting. And I will definitely listen to the one with the space lawyer. That sounds fascinating.
Yeah, it was a very nice conversation, actually. It was someone who spoke in great detail about what's going on right now with all these billionaires flying into space. What's their game? What's the story behind it, which I thought was fascinating. And then also what the implication is of when humans go into space. So questions like, can SpaceX impose a legal system on Mars? or what happens when you violate the law in space. Where are you held accountable and who follows up on that? And, so yeah, it was a very interesting conversation, but I naturally hope that this one is going to be equally interesting because blockchain, that's just such a big word these days. We're going to have a lot of explain this to me like I'm 8 years old, because I really would like to seize the opportunity when talking to you that you basically explain to someone who doesn't understand anything about this to really get what's going on here. What is blockchain and why should we all get into it?
Yeah, absolutely. And there's a lot of science fiction words around blockchain, whether it's decentralization or NFTs or tokens, decentralized exchanges. And in part, some of that language is there to signal a new generation's technical progress in building systems for themselves that are meant to be for the new generation, that are meant to be something that's separate and distinct from what has come before. So, a lot of that is kind of signaling, but it really reflects a lot of underlying human behaviors that you see in any population in any time period, whether it's 2021 or 1995 or the 1500s. You're going to have kind of repeating patterns of what people do. And so we can take all sorts of different frames about what a blockchain is. But I think for me, one of the core attributes that is really special, that is important to understand, is this idea of digital scarcity or digital uniqueness. So you can imagine in the real world, let's say I've got a sandwich and you've got some money and you'd like a sandwich. And so you give me the money and I give you the sandwich. And nobody is arguing about, is the sandwich real? Is the money real? We had this exchange in the physical space and the laws of physics. Now, when you go to the digital world, let's say it's 2010, and you've got the beginnings of some sort of digital objects, and increasingly we're spending more and more time on the web, in digitally constructed worlds, in completely cashless economies, with status that is largely your social network status rather than, the Rolex on your physical arm. Okay, so you're in this world, and again, you want to get a sandwich and you want to pay money for it. Well, that's not how the internet ended up. The internet ended up in a way where things that are digital are not scarce, meaning I have a picture of a sandwich, or I have some sort of specification or 3D rendering, and I just copy and paste it. And I do that again and again and again, and I do it 1 billion times until the thing itself is worthless. It's not, it holds no value. The marginal cost to produce it is 0. And so everybody gets free consumption. You can think of endless scrolling on Twitter or Facebook or, what happened with music piracy and video and so on. But you pay a cost for that free consumption, which is the kind of dystopian outcome that we have. And the cost for that free consumption is, of course, the advertising panopticon. You are consuming inside of a gigantic monolithic advertising monopoly that sits on top of the knowledge base of the internet, and through complex mathematical algorithms serves you essentially paid propaganda, and whether that propaganda is for buying a particular brand of clothing or voting for a particular political party, the underlying thing is the same, which is there is no economy. The goods don't work. The goods are digital and they're worthless. And so the thing that ends up being packaged as a product is your attention, and leading to this sort of bizarre internet industry structure. Okay. So now we get to blockchain, which is, it's an invention that through the work of many simultaneous computers and machines and a bunch of cryptography, which is just, encryption, the thing that makes it safe to use, and preserves your privacy, allows digital goods to actually be scarce. So all of a sudden, you're in this world where you actually have this one digital sandwich, or in the very first case, you have, let's say, 1 Bitcoin. If I want to buy that from you and you give me cash for it, and let's put aside whether Bitcoin's money and so on, but let's say you give me something of value that I care about, and I give you Bitcoin in exchange, you have it and I don't. Mm-hmm. And that is fantastical. I mean, that seems so basic, and it's an obvious tenet of the physical world, but in the digital world, it doesn't exist. And so Bitcoin and the blockchain underneath it, this is the quality they manufacture. And so it opened up this whole possibility of people having digital goods that are, in essence, real, and that opens up the human economy back into the internet rather than kind of the machine advertising economy that we've had. And so that's the kind of the foundational innovation in my view. And then the next step is computational blockchain and what we've gotten to with Ethereum. But let me pause there before I go too deep.
No, this is already very interesting, and surprisingly I can follow it all. So that should mean something. So thank you for taking us this far. So am I right to say that it's a new way of digital value creation? That's where it started, that basically people said, well, listen, I don't want to be trapped into this big advertising conglomerate being a victim of clickbait continuously. I want to create value to the things that I'm building online. And I want to kind of be able to look at it as if I had a sandwich, as you said, in the real world.
Yeah, so the origins of many things are, sort of sideways to what they become. And a lot of people kind of get tripped up on cultural tenets that is not their tribe. So I'll open that up, but it's not the definitive thing, right? So the origin of Bitcoin is, there's lots of threads you can trace into the 90s and the 80s and go back to, like the early cyberpunk sci-fi and all sorts of interesting mathematical threads. But, the kind of the popular narrative is that it was 2008 and the Fed and the Treasury in the U.S. were busy trying to save the financial sector. And in large part, they were doing that through participation in the financial markets in a way that hasn't been done before, which led to an increase in the money supply, and so therefore there are people who are disillusioned with the financial services industry for failing the regular person. There are people who are disillusioned with the idea that you would first bail out these institutions that failed and the folks that were running them. And there was disillusionment in overall the money systems of the West and the control of those systems. And so there's a kind of like a anarchist libertarian thread that you can trace all the way back to people who, never wanted to go off the gold standard and that want to sort of protect their earnings against inflation, right? So it's an anti-Federal Reserve sort of point of view. Mm-hmm. And the problem with taking this into the world of the internet is, okay, you might have this point of view, but there's no commodity that is digital. So you might want something that is fixed in number that you can exchange, but you don't have anything. And so Bitcoin was in part a reaction to wanting to have a currency. And again, it's fairly complicated whether it is a currency or commodity or, all those distinctions and why. But, the initial concept is we want a currency that has a fixed inflation schedule. So we know how much of it there's going to be, that nobody, whether the government or an investment bank or some, financial or geopolitical adversary can manipulate. And so Bitcoin uses the blockchain in order to achieve those qualities. And the qualities it has is it is digitally scarce. So there's a limited supply of it that is being printed according to a well-known emission schedule that levels out over time. And then number two is that you can exchange it and send it from wallet to wallet. And it has this quality of a digital asset, and so the root of the idea comes from not having your net worth eroded by the function of a government or the failing of a financial system in which you have no stake, and it's a very popular and strong narrative. But the broader implication, and not that that's a small thing, right? For many places around the world, having a stable store of value that is incorruptible it's an order of magnitude improvement, right? It is such a massive liberation for people's financial security in a place where economic or legal or financial supports are of low quality, and so that's not as acutely felt in the U.S. and the West. But I think for some people, marginalized communities in particular, that is felt and it does resonate. But kind of the next step from that is, okay, you have digital scarcity and you can move this commodity around. You can have people pay you for some object. That's great, but the kind of the human potential is very broad. There are many more things that one can do other than this abstracted transaction. And so the next step forward is the innovation of what people call smart contracts, or, the leading platform for this, Ethereum. There are a number of other programmable or computational blockchains, but largely I'll use Ethereum and words like Web3. If you think about the evolution of the web from HTML flat websites to the kind of the social mobile web that we have now, Web 2.0, and Web 3 being the Internet of Value. And so I'll use Web 3 to refer more broadly to this thing. And so the next invention that got added into the mix and really opened up where we are today is the idea to add software execution into the mix. And, so people have always had tools. When we invented fire, when we took control of fire for our civilization, we started using it as a tool to project our desires and abilities. When we, started to write down our language, that became a tool for expressing and having our desires persist through history. When we wrote computer programs that could do algorithms and mathematics for us, again, we extended the human calculation engine forward. And similarly, more computation, it's not some sort of artificial intelligence boogeyman. It's just more kind of human thinking and technology expanding out. And so by putting software into blockchains, we're able to literally capture or encode or create any sort of thing that a person wants to be creative about. So you want to create new financial systems for investing, for trading, for lending, borrowing, and so on. That's great. That's really aligned with how blockchains work. You might want to create a new media industry for artists and musicians. Again, you can see that happening with non-fungible tokens. You want to move forward into health and governance and all the other sectors that touch the economy. And again, software is the way that you'd be able to express your rule sets and your logic and your kind of ideas about the business into programs that run on this network. And so, the blockchain platforms that are able to run code, they're able to use the quality of the blockchain to agree as to what the code outputs.
Yeah.
So this is a little bit of a hairy concept.
No, I get it. And of course, there are multiple layers to what you explained, because you took us into the infrastructure concept of where Ethereum can be an infrastructure for enterprise solutions. But then on the other side, there's also the coin or the cryptocurrency that is being referred to very often as well. Those are two very different things. Right. I think that should be made clear, that these are not exactly the same. You don't have to go with the currency if you want to go with Ethereum. Equally so, Ethereum is not the only blockchain infrastructure provider. There are more out there, or, blockchain in and of itself is not a proprietary system. Correct? Blockchain is a concept that belongs to everyone. It's a narrative of everyone. Is that true?
So there are many blockchains, and the concept of a blockchain architecture, meaning the design according to which somebody builds a blockchain, all of that stuff is open source. Anybody, sufficiently skilled can figure out whether they want to launch this, but it's very nuts and bolts. It's like very deep tech, right? So it's the standards on which the internet runs is kind of the equivalent to the standards and protocols on which the internet of money or value of these digital assets would run. So it's quite deep tech, and I think in this conversation about the asset class, meaning the tokens, or the currency, or the thing that you would buy, invest in, or that people speculate on, versus the machine that accepts the tokens as currency in order to do some particular thing. These are very different, in the same way that when you buy Apple stock and when you buy an iPhone, it's obvious that those two are not the same. And so, of course, on Twitter, it's nice to conflate everything because time is of the essence and you're trying to promote your investments. But they are very different things. There's an operational component, and then there is a kind of a thing that powers the factory, right? So in an analogy, imagine a vending machine that's got a bunch of Cokes in it, and you want to get a Coke, and you put in the token, ETH, and then you get a Coke out, which is the product. Now, the vending machine is a lot more complicated than that, right? And largely you're putting in the token, and this is for Ethereum in particular, you're putting in the token in order to pay for computation. There's lots and lots of programs on Ethereum. There's millions of people now who have addresses and want to get transactions done and run programs. You know, and unlike running a program on your desktop, which is on your machine, when you're running on an Ethereum, you're literally running it in the same place as everyone else in the world, right? So think that is a fundamentally different way to do computation and much more expensive. And the reason you do that is so that you and everyone else in the world can agree to the output of that program, so that you agreed that whatever you did or caused the action to happen, that thing is true, and that it is scarce and it is real. And so in order to finance that computation in the network, you have to put some tokens into the machine in the form of gas, which is kind of a subset of ETH.
Mm-hmm. Let's pause there, because we can go on, but we also need to discuss your challenges, which I think, are also very interesting. I just wanted to also seize the opportunity, because Ethereum was in the news, I believe, yesterday, because there was a major upgrade, because there was some criticism on cryptocurrency and the way this entire system is being maintained. And that criticism was that it was bad for the environment. And now, through a major upgrade in the Ethereum system, things are going to be a lot more simple, and this environmental impact that it previously had will disappear. Am I explaining this correctly?
That's a very kind explanation. It's a little bit optimistic about where we are today, although it hints at the parts that are indeed happening. I'll just say there are arguments on both sides about why Bitcoin mining is good or bad for the environment, what kind of electricity production it incentivizes, given the lowest cost, given that miners have a fixed amount of money they can make from electricity, they end up driving towards lowest cost electricity, and so on and so forth. But kind of putting all that aside, there are new ideas around figuring out how to get to that agreement, to that consensus, without having to do the work of plugging into your wall socket. And so Ethereum is on a path towards that with a series of upgrades. Some of that groundwork is being laid now. There's already a parallel chain that's being run to make sure that the transition can happen. There are also additional technologies and kind of independent third parties that have built like addendums and things that are called sidechains or scaling solutions that attach to the main Ethereum network that people can travel on and use, that are already not using electric power, but are entirely mediated by mathematics. And so yesterday's upgrade is laying a little bit of the groundwork for that transition in the future. It's also simplifying and making more stable some of that payment mechanism I describe about having to put tokens into the machine to run computation, because one of the problems is that sometimes the vending machine gets really popular and everybody rushes to use it at the same time because cool things are in, and they get into a line, and what happens is that the price to use the machine goes up. And sometimes it goes up so much that people get upset and quite sad and angry about not being able to do what they want to do. And so this last upgrade kind of focuses on how to make the fee to use the thing a little bit more predictable in situations of stress. Yeah.
Well, I mean, it's the first step, and kudos to Ethereum and all people involved for trying to do this, because it was a worry, at least for me, to see like, okay, it's all nice and lovely with this alternate universe. I'm just referring to it like that. But if it's at the expense of the environment, or if it has too heavy an impact on the environment, then you might want to reconsider. So it's good to keep on looking at how you can improve that. So it's genuinely beneficial for all, kind of, on every level. So kudos for taking the first steps. We're going to dive into your challenges, Alex. You, as your first challenge, and I think it's very interesting because you know so much about this, and also I think in your previous capacities working in the financial industry or the fintech industry, my guess is you were often a spokesperson or looking into how new things on the level of financial technology were coming together. And you write as your first challenge that sometimes you were too early to a market, that you were right about the thesis, but that the demand wasn't seen for a while. So you were kind of in an echo chamber, I can imagine.
Yeah, I think this is an interesting, it's not necessarily a failing, but it is a learning, and what does it mean to be an entrepreneur in the first place? For me, I'm not necessarily like naturally born commercial. Like there are people who are very commercial who just see an opportunity and they say, these people have problems. I'm going to solve it with some scotch tape. And then boom, next thing you know, $50 billion IPO. But for me, it's taken me a while to get to a place where I have better intuitions about commercial opportunities. Rather, I come at things kind of like, I grew up doing a lot of visual art. And so I come to things as a visual artist saying, here's a white space. What interesting thing can be made that is novel and that fits into this white space? And there's actually a lot of literature in machine learning and artificial intelligence about solving problems and getting to novel outcomes. And in particular, with like machine vision and with natural language processing, search is a really big problem, like figuring out how to land on whether this is a cat or a dog or this word means this or that is really, really hard. And so one of the like innovations is something called novelty search. And novelty search tries to get to an answer not through a straight line. It tries to get through an answer by searching for novelty. So you're not maximizing incrementally how closer you're getting to being profitable. You're maximizing incrementally for like how new the thing is. And this is actually how almost all invention works, where it's not somebody having some grand discovery about the world on their own. It's they're working on one thing and you find penicillin, right? Like it's that kind of stuff where it's the accident, and so novelty search is a really effective way to get to these breakthrough outcomes. And so for me as an artist, I kind of leaned into that, where I'm only interested, like the way I'm wired is I'm only interested in the frontier. So I'm spending all my time in decentralized finance and NFTs. And so even though that's 0.001 of how a 6 trillion financial services industry works, for me, everything else is old, dated, and dead. It's irrelevant. It's not interesting. If you can go on the rocket, why would you start laundromats? Is sort of how I feel. And so this is a blind spot for sure for a lot of entrepreneurs who are interested in the novel, but have no business sense and don't understand that your counterparty is people. And, so for me, that's definitely something that I've been early in the digital wealth markets, digital investing markets with a robo-advisor, and similarly with fintech and with crypto assets. And it's a double-edged sword because I love being on the edge, but at the same time, always kind of looking back when is the mainstream coming in here? And there's a funny flip to it too, which is when the mainstream does come, it's almost like a hipster getting angry about their favorite indie music band becoming popular.
So you get upset when it becomes mainstream. It's like, I knew this already years ago. What are you doing here? Yeah.
And this is the difference between sort of playing the game correctly versus not, is you can get that early knowledge by being thoughtful about some particular thing you're really passionate about or good at. And you can build a company in that space and try to last long enough, or you can make an investment and, try to persist through up and down markets. And then also having a longer term vision about where the world is going and that you're a little bit ahead of the puck, not 10, 20 years ahead of the puck, but, a little bit.
Mm-hmm. And the little bit that I know about Consensus is that it's actually very entrepreneurial. So the company in and of itself functions on people who thrive in an entrepreneurial context to a certain extent. So am I correct? So I'm just trying to visualize you from being a CEO of your own company to now taking on the role as a head economist, but still working very entrepreneurially and autonomously, I can imagine.
Yeah, absolutely. So Consensus is a very special company, and it's at the heart of this gigantic innovation ecosystem, which has emerged over the last 4 to 5 years, that draws in people who tend to be interdisciplinary, very self-directed, and who are attracted to these ideas of, they're progressive ideas, not in the sense of kind of socially progressive, but progressive in that change is good versus the conservative ideas of, like tradition is good versus change is good. And so blockchain is a very progressive area because we're remaking everything again. And for Consensus, there's a balance, there's a delicate balance between keeping that spirit of how do we get lots of people who all want to really use their soul to create and build completely new things, and then balance that against we're a group of people with salaries and benefits, and we want people to be happy and for their equity to be valuable and so on and so forth. And so that's a daily balance. We're not alone in that balance, but we're not, on the one hand, we're not as decentralized as some of the core projects on blockchains that have no legal entity, that sometimes just have anonymous developers who are doing this and making millions and so on. We're much more packaged as a traditional entity, but at the same time, we've got a lot more fervor than certainly the traditional banks, but even I would say the fintechs like Revolut and Chime and Robinhood is kind of a more core transformative thesis around blockchain. And so it's an ongoing evolution for us.
Yeah. We're going to go to your second challenge, and you already hinted towards it in your first. You said, well, I'm more the novelty seeker. I go to the very edge and look for what's next. I'm not as good in the sales and marketing part of the entire exercise. And you're right that the reason for that is that you are an introvert. How do you know you're an introvert?
You don't have to ask an introvert how they know. They've taken the Myers-Briggs test and will tell you that they're an INTJ. So for me, I'm grounded in pretty traditional analytical academic background, so economics, the law, business. And when I started my career, I started it at Lehman Brothers as an analyst in the investment management division. And so that does not sound like somebody who's a big risk taker to go and start their own business. That sounds like somebody who is going to run a spreadsheet for 30 years in a private equity firm. And end of the day, that's not my DNA. I do have this nagging artist that tortures me to not do that. And that's sort of my personal split. But as I have come to that realization earlier in my career, getting out of the sort of the analyst mode and getting into a builder mode, you've got to interface with other people. And so back in 2009, when I started my first company, sales, marketing, storytelling, all of these things I was at zero. And that's the opposite of what you need when you are trying to grow your brand, when you're trying to persuade people to buy something from you, when you're telling people who are 30 years your senior and have 1,000 times more wealth and clout that they're wrong. And let's say you're doing that literally for 3 years straight every single day of the week. Well, how do you do that when you're wired to be conflict averse, when you're wired to want to look inwards rather than outwards, where you might not even know what persuasion is or what motivates other people? And so the answer for me, and why I kind of brought this up as an interesting failing, is that it's not for you to try and be gregarious and be charming and use the tools of people who are naturally positioned with kind of a sales or just like that kind of talent. For me, it's been using my tools, which is the ability to build machinery and systems and frameworks that help me interface with the rest of society. So like I've built out a LinkedIn presence to 350,000 people. I built out my newsletter to 85,000 people. I've built a bunch of companies. And the way I've done that is, of course, by putting myself into the uncomfortable situation and failing a bunch and all of that. That's primarily going to give you learning about what's not working. And then how you address that, I think you need to bring your own tools to it. So again, for me, it was thinking about interactions with people as a puzzle, as figuring out, I'm trying to get someone to do something and I have got to map out how they think and what drives them. And so like in that situation of trying to get a venture capital deal done or signing a big client, mapping out the situation and solving it and being hypothesis driven is super powerful because you're essentially building a muscle to do this scientifically. Or for like more marketing, broad scale activities, again, you can build systems with automation and data and quantitative tools to understand what do people as a population, as a superorganism care about? What is the narrative or the zeitgeist that is traveling about? And then, how can you capture that analytically? And then what are the actions or inputs you can do? And how can you plug them into that macro context that works? And, that is authentic. That is not a bot army, but that is actually in the language of your counterparty. And so, again, you can just dive head in and be really charismatic and win by default. And for some people that works. And for me, it was always, I got to step back and think about how do I design a system that is able to do that. And last year, I took a spin as the CMO of Consensus when we were restructuring our marketing team. And so the word success and failure is kind of wrong here. Certainly you can point to outcomes and derive that, but it's more about like, no matter who you are and how you're wired, you can design a process for yourself in order to achieve a goal and rely on the motions that are natural to you because there are lots of people like you out there and, don't trap yourself in some negative narrative about what you can do.
Yeah. It's interesting because a lot of what you say also starts with finding out who you really are, right? And kind of what you're good at and what you're not good at. But the only way to find out is by doing. There's really no other way. You just mentioned Myers-Briggs, which is a test often used in corporate settings whereby you can be a variety of types. So it's a kind of a combination. I am an ENTJ. So I think the E and the I is where we vary. So I know I'm an extrovert just because of the way I enjoy reaching out to people and it actually gives me energy. We've had earlier conversations also with people on this podcast series, someone similar to you who also said I'm an introvert and I hate listening to myself. So he also, as a CEO of a data analytics company, needs to do lots of interviews, but he hates doing them, which I think can be very, very difficult if you're an introvert, trying to get yourself out there because you have to, but it's just not something you thrive in or you like doing. My take is you enjoy interviews or is it difficult for you as well?
At this point, I've practiced this muscle for about a decade. So, okay. I do enjoy it. And that puts me in a place where I want to influence thought and kind of be at the center of an ecosystem and try to be responsible for like articulating a point of view that people congeal around and get excited about. And so I think it incrementally changes the world to do a talking that is grounded and informed and brings people together.
Okay. And then as your third challenge, Lex, you mentioned that in the past you were part of a company that did not work. Well, that's an interesting challenge because, you previously spoke about, you being an entrepreneur, you're trying to go to the very outer edges, trying to see what's next, really making an effort, working very hard to do it as an introvert, but then kind of realizing that the odds are against you and the circumstances are against you so that the company you're involved with is not going to work. So what do you do then?
Yeah. And I think the learning is how to interpret failure and how to interpret information in general. And this is really hard because we are all surrounded by deep social pressures and stories about this person won because they're perfect and right, and this person lost because they were wrong all the time, and how embarrassing for them, and that's certainly amplified. I think it's really core not to internalize that and to understand the structure of the games, the market games or the political games or the prestige games that you are participating in. And so, if I have a company that tries to do something for 3 years and that doesn't work, I can pivot the company. I can make it do something else. Or I can say I'm a bad person and everything I do is wrong. And I think there's part of the scientific method in it, like this isn't working, so I'll try another thing. And I think that's a very healthy approach to it. And so within the information of what's going wrong is a lesson about what you're not bringing to the table. And the table, so to speak, it's a market. So your counterparty is a random number generator. It's an ocean of fractals of, supply and demand and cultural zeitgeist and just like stuff that you can't blame, or you can't think about somebody on the other side and visualize them as not giving you the opportunity to succeed, because there is no, on that other side is not a person. It is a shifting sea of the human condition, right? And so what you're getting from the market or from whatever is really a mirror about what activities you're taking on, because whatever activities you're taking on, there are 1,000 people who are identically placed to you, 1 year older, 1 year younger, from this college versus this college, male, female, this ethnicity, this country, but you're all, it's a soup of DNA of essentially the same person, and you're all doing exactly the same thing because you've read exactly the same article and you've decided to invest your time in exactly the same way. And what you're getting from the world is a mirror of who you are and how you behave and what decisions you make. And so to figure out what's going on, you shouldn't react to this hurts. My business failed. You should react to what is the information that I'm getting that is being sent to me by this set of particular symptoms. And so what I've described as a place that I aspire to be, I'm not there. That it's very zen to be there. But I think, I would like to have this quality because I think it navigates you through really complex situations that can make you feel very down, which is sort of the entrepreneurial condition, full stop, but more productively.
What I've learned is that, yes, there's the observation or, the self-diagnosis that something's wrong, but that's a separate thing from acting on it. And those things are completely different. And sometimes you just accept something and you say, well, this is just what it is. When you just spoke about this mirror, you see this mirror, you see your company's not functioning, but you have two options. Either you act upon it and you pivot, or you go look for another solution, or you basically say, well, it's never going to work because this is just the way the world works. And you don't know how to act upon it. You know something's wrong, but you choose not to act because you might not know how, or you might think it's easier. It could be laziness or it could be something. I just want to point out that these are two different things.
Yeah, absolutely.
Knowing what's wrong doesn't mean that you've done something about it. That's the next step. Very interesting, Lex. Thank you so much for taking a deep dive into you personally, but also into blockchain and consensus. I think we could talk, easily for another 2 hours, but so come back anytime. We're almost at the end of this interview. 2 very last questions that I ask all my guests. One is around reading. So you've just taken us into this exciting world of blockchain and cryptocurrency. Is there any reading you would recommend for people who want to know more?
I read different things when you're in different modes, so, and to your point of doing versus understanding are quite different modes. So when you're doing, you need to have information flow. So for me, I'll subscribe to anywhere between 5 to 20 fintech, crypto, DeFi, marketing, entrepreneurship, product newsletters. So when you're doing, you need that input of what are the others around you saying and thinking. And, for me, actually, in that mode, writing is more fruitful than reading because it helps me congeal my path forward by articulating how this stuff fits together. And when I'm in that mode, what I tend to read or consume are things that have nothing to do with my work just to clear my brain, so evolution stuff or neurobiology or, like just some sci-fi novel or whatever.
Any title in particular you would like to mention?
House of the New Suns, I think. It's a 3-parter series from the 80s and 90s. Is that right? Maybe 70s. It's fantastic. I mean, I would recommend, I had a great time doing this about 3 years ago, of doing the kind of sci-fi novel from every decade. So I did Dune, and then Neuromancer, and then Diamond Age, Accelerando for the mid-2000s, and I think that's kind of where I stopped. And so that's a fun journey because you get to see how people thought about the future and where they were right and wrong, and so would recommend that.
Nice. Thank you for that. I stopped your train of thought at some moment. You were about to finish on more fintech reading.
Yeah, so I write a newsletter called the Fintech Blueprint. Consensus has a newsletter called Signal, so check those out. They're great publications like Bankless, The Defiant, and then on Substack, there's now a pretty great fintech community with Fintech Weekly and Mark Rubenstein, who does essentially an equity research dive for free for folks to read on kind of the large public financial services companies. And then when you're learning, when you're trying to get up to speed on something, I feel like that's a place where you just kind of go and consume the literature. So 6 or 7 years ago, when artificial intelligence and machine learning started to become a much more recurring theme, there's a whole litany of cool stuff out there that I remember reading just to get up to speed on how people thought about artificial intelligence and the state of the art. Mm-hmm. There's things coming out from OpenAI Institute now that are really interesting. There's thinking coming from a publication called Less Wrong about rationality and the challenges in building artificial intelligence and thinking in a Bayesian rational way. And so, if you're going to go into a sector, then my mode becomes like shut off the feeds and focus on bottoms up kind of ramping into information.
Nice. Thank you so much for these recommendations. And we'll be sure to include the links to your newsletter as well as the Consensus one in our show notes so people can find them. And then the very last question. Now let's turn the tables. This is your podcast series. Who would you like to interview as your next guest?
Well, I do have a podcast series, and
there you go.
I interview a lot of folks in the fintech and DeFi spaces, sort of these edges of finance. Right now, I've got my sights on, I would love to talk to Jeff Davis of a project called Artblocks. Artblocks is just fantastical. It is a project that allows people to mint, which is the digital version of printing, NFTs, which are the digital version of paintings, generative art, which is the software version of a paintbrush, on top of blockchain, which is the digital version, of a physical reality. And so there are these amazing, beautiful mathematical images that are truly gorgeous that are being plugged into and generated out of, connected to the Ethereum blockchain and an amazing community coming out of it. So the sort of sliver between art, finance, mathematics, and code, it's sort of my target right now for what's cool.
Wow. What's the name of your podcast?
So you can get it from Consensus. It's called Signal. And then some of it is also syndicated under the Fintech Blueprint too. Okay.
Signal and the Fintech Blueprint. Lex Sokolin, it's been a great pleasure talking to you. Thank you for explaining this to us, this amazing alternate universe called blockchain and kind of all the new things that are coming with it, the growth of Consensus. And, such an exciting journey to be a part of. It's been a real pleasure talking to you. Lex Sokolin.
My pleasure. Thanks for having me.
If you liked this episode of the Teach Pitch podcast, then it would mean the absolute world if you could share it with your friends and or give it a short review on your preferred podcast platform. The more you share your ideas about these interviews, the more people will find out about them. So do let us know what you think. We'd be very, very grateful.
Special thanks to Kevin MacLeod for our beautiful theme music, Le Grand Chase. This podcast was produced and edited by Natalie Piles. Project coordination by Inva Cheney.